Hey everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 5th of March, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the second week of March. And let's begin with spot gold, where you can see yesterday, Friday, basically just blasted up higher, right back into that resistance zone between the previous two swing highs. We go take a look at the weekly time frame. We had marked these two swing highs here, and which it did hit before and pull back, and which was at the 262 FIB extension level, and now it has continued to push back up into that zone after pulling back and bouncing off the upper channel trend line just below the 162 FIB extension area. Let's go back to the daily time frame. So at the start of the week, it did dip lower here on the Monday, and that's where the upper channel trend line was, and it dipped below and then bounced off and continued to rally on the Tuesday and pull back over the last on Wednesday and Thursday before it finally blasted off on Friday, and all due to flight to safety for this safe haven currency pair. It's not a currency pair, but under metals, but a insurance to and as a hedge as well against inflation. So it rallied back up into this resistance zone here, back to 1970. So this week, let's see whether it's going to break out higher. Initially, I think there's going to be a pullback, probably back down to this consolidation area first, and at most back to this 200 FIB level, where there's a confluence with the longer term reversal at the 138 FIB extension. Okay, so let's clear some of this now. This is back up here as a resistance. We definitely have this support zone. We'll move this support zone back up here. Support zone will be the deeper retracement. Okay, so let's add a couple of more round numbers here. We do have 1950. Let's remove this one here and let's move it up to the 2000 level. Which would be a prime target. oops, picked up the wrong one. So this one here into this zone with the 200 pip extension at the 2003. So this 2000 level is going to be the next significant target. Let's go back to the weekly and adjust this. 1982.41. Right, that's another swing high level here. 1972.17. Let's check this. 17. Okay. So it's right up to the 262 fib and the previous another swing high here. So we're looking to see if we can break that resistance. It's likely going to pull back. This could be a likely pullback area at the 1950 round figure. Or it attempts to climb up higher. If it does dip lower, which is possible, that's the 200 fib of this move, of this reversal. And then the bounce. Okay, so on Friday, yesterday, there was also the US non-farm payroll report, which came out better than expected. And seemed that it was already priced in for the US dollar because it was already rising. But even though the US dollar was also moving up higher, so too was the spot gold as a safe haven trade. So both were climbing up, and the on-farm payroll was basically almost a non-event because of the conflict, which has been intensified by Russia. So it's going to be stretched out a bit longer. And this week, there's only a couple of news from the US, but the key one will be the CPI. That will be another cue for the Federal Reserve. They've already seen better jobs report. And next will be the CPI, and that will give more fuel for this coming month's meeting, where they will likely increase rate by 25 basis points, and which Fed Chair Powell testified last week on Wednesday, where he is supportive of a rate hike. So that has also fueled the US dollar. Okay, so let's also take a look at the US dollar index, the DXY. Now here's the US dollar index, DXY, and you can see that just yesterday on Friday it shot up, blasting through this resistance and through the 9800 level right to the 262 fib extension of this previous move up. So it has moved 2.6 times of this move. Right, this was the 200. Let's double that move. So that was broken early at the start of the week, and it continued to rally higher as a flight to safety for the safe haven pairs, spot safe haven currencies, Japanese yen, spot gold, some commodities, currencies, and US dollar, because the on top of it, the US dollar, the Fed is going to increase rate in March. Fed Chair Powell has already announced that during his testimony. And also with better than expected non-farm payroll jobs report, it was already on the way up, so it just added fuel to it, and until it hit the 262. But now with this bit of wick here, there could be some retracement pullback and consolidation for next week. We'll see if that's the case. So let's mark this as support for now. As well as this lower level here. Let's just extend this swing high here. And it basically broke out from this consolidation of this box towards the end of February. And once it broke out, just that was due to all the war concerns. This was the start of the invasion on the 24th of February. And after that, some volatility, but eventually just continued to break out higher last week. All right, let's take a look on a weekly time frame. We haven't really looked at it on a weekly, and yes, it has hit significant highs before. That was in early 2020 during the start of the pandemic. Now it's trying to climb up to probably not to those extremes, but it's trying to reach some areas down here. Probably this was the consolidation. Consolidation area here. Where he eventually broke back down. So let's see how much of a retracement there'll be next week, and whether it's able to find support and consolidate, or whether it's going to continue to rally higher. Okay, going back to the daily time frame. And if we take a look at a reversal move here, a recent reversal move for the last week. And it has also has a confluence here with the 162 fib reversal, also confluence with the 262 fib. So that's a potential resistance zone for now. And it could be further consolidation after that and pullback. All right, so let's see how the movement is next week, and hopefully the situation settle down in the Ukraine. All right, let's move back to the other pairs again. Okay, let's take a look at the dollar against Japanese yen, where the Japanese yen is also a safe haven currency. But in this case, along with the US dollar, which also has been acting as a safe haven currency because of it's the major currency in the world, and with potential rate hikes in the future, in the near future. So it's also acting as a safe haven trade. So in this case, we're both fighting for position. The dollar yen is supposed to drop with a stronger Japanese yen, but at the same time, US dollar is also strengthening. So in the end, it neutralizes and stuck in the range here. So it did not reach the 50 fib level, and this is still providing support. The daily 55 EMA, and it's unable to break out through this resistance zone or level. Let's continue to identify this area. So on Wednesday, it did climb up. That's with the Fed Chair Powell's testimony, where he still is supportive of a rate hike, 25 basis points hike this coming meeting. And after that, pull back down on the Friday as the fighting in the Ukraine continues and it's getting extended. So that's where the Japanese yen strengthened. So unfortunately, it's still stuck in this range here now. And it's finding support at the daily 55, just below the 115, and it's unable to climb up above to the 116 level. So maybe could be a while before it breaks out. So for now, we will have to mark this in a range here. And it's roughly about 115 pip range. So if it does break out higher, then we should see a test of the 116 and perhaps a retest of this swing high, which has been tested twice already. unlikely that it's going to break through yet. If it does fall lower, then there is support at the next round figure at the 114.00, right at the 62 pip retracement of this swing move up. So for now, it's the limited range. Let's add one more area of support here. Let's move this one lower. And perhaps let's move this one up to the swing high. So this would be the immediate short-term support. It's could be short-term resistance. Okay, so for now, the safe haven trade is in play, as well as you will see for the Aussie dollar, the commodities as well. It's been rising, commodity currencies. So do check out my other video on the major pairs, and have a safe week and a good trading week, and cheers for now.